Imagine a world where digital payments flow freely across borders, where money moves at the speed of light through the global financial system. Now imagine what happens when criminals exploit this system. This is exactly what occurred with Connectum, a UK-licensed payment processor at the heart of a $500 million fraud scheme. The story begins in London's financial district. A seemingly legitimate fintech company processes millions in transactions daily. Their marketing materials promise secure, regulated payment services. Their website displays prestigious financial licenses. But beneath this polished exterior lies a troubling reality. In 2021, Austrian police made a disturbing discovery. They traced $8 million in fraud proceeds flowing through Connectum's accounts. This wasn't a simple case of being deceived by sophisticated criminals. Internal emails would later reveal that Connectum executives continued processing these payments, even after warnings from UK regulators. 2020 marked a pivotal moment. Connectum's founder, Edgars Lasmanis, sold the company. The buyer, Heng Sokha, wife of a retired senior Cambodian government official. At the time, Connectum appeared highly profitable. But our investigation reveals a darker truth about these profits. The FBI's investigation, led by Special Agent Andrew Kropcho, uncovered a staggering pattern. Bank records showed victims had sent at least $150 million to a single Connectum account. This money was part of an elaborate cryptocurrency mining scheme. The company behind it? An Estonian operation called Hashflare. Hashflare marketed itself as a revolutionary cryptocurrency mining service. They promised investors access to cutting-edge mining facilities, regular returns from Bitcoin mining operations, a chance to profit from the crypto boom. But US prosecutors discovered something very different. The majority of these mining operations simply didn't exist. Instead, they operated a sophisticated Ponzi scheme worth $500 million. The Financial Conduct Authority, Britain's financial watchdog, had a problem. They had evidence of fraud as early as 2021. They knew about the suspicious transactions. They had seen the warning signs, yet they waited until May 2024 to take action. 3 years during which Connectum continued processing payments. 3 years during which more victims lost their money. Behind these numbers are real victims, small investors who trusted the system, people who believed in the promise of cryptocurrency, individuals who lost their life savings. While regulators delayed, these losses mounted. Company director Ivan Leonidov, a Moscow-trained British lawyer, declined our interview requests. His only statement: Connectum takes its regulatory obligations seriously. But internal documents tell a different story. A story of ignored warnings, of continued processing despite clear red flags, of profits prioritized over compliance. Financial expert Ian Tyler explains the implications. This isn't just about one company's failure. It's about fundamental weaknesses in our financial system. The current owner will lose everything. The directors face industry-wide bans. But the real damage is to public trust in financial regulation. Connectum's story reflects a broader crisis in British financial oversight. The numbers are stark. Fraud has become the UK's most common crime. Yet convictions have plummeted from 12,378 in 2012 to just 3,455 in 2022, a 75% decrease while fraud cases soar. Anti-corruption campaigners point to chronic underfunding. Britain's financial crime agencies lack resources. The City of London's role in global finance has grown exponentially, but regulatory capacity hasn't kept pace. This creates perfect conditions for financial crime to flourish. Heng Sokha's role raises another crucial issue. As a politically exposed person, she should have faced enhanced scrutiny. Standard compliance procedures demand extra vigilance. Yet somehow, this oversight failed. The question is, how many other similar cases are we missing? The Connectum case sets a dangerous precedent. It shows how easily payment processors can be exploited, how regulatory delays enable financial crime, how politically connected individuals can operate in the shadows of global finance. The warning signs were always there: suspicious transaction patterns, political connections, regulatory warnings. Yet the system failed to act in time. This investigation raises urgent questions. How many other Connectums are operating right now? Why do regulators take so long to act? What needs to change in our financial oversight system? For Fintech Fair Play, this isn't just another story. because somewhere right now another Connectum is taking shape. Another scheme is building. Another fraud is waiting to be exposed. This is Fintech Fair Play. Stay vigilant, stay informed, and remember, in the world of finance, what you don't know can hurt you.